Welcome to The Business. I'm Lanre Akinola. On this show, we examine the world of business from an African perspective, looking at developments across the continent and beyond. We break down the world of business in digestible terms. After all, business affects every one of us, whoever and wherever we are. This week on The Business, Africa's tech startups set a new funding record. Good news, but how excited should we be? Footballer Cristiano Ronaldo opens his first hotel in Africa in Marrakesh, Morocco. He's just the latest to tap into the continent's growing hospitality sector. The automotive sector lures big-name investors to Africa. What's driving interest? And this week's main story, Africa takes center stage at Davos. What is the annual gathering all about? In this week's breakdown, we look at regional integration. Could 2018 be a game-changing year? And in part two of The Business, I'll be talking to Werner Ayukegba, Principal Africa Analyst at IHS Markit. Africa's tech startups raised $195 million last year, a new record and a 51% increase on the year before. This is according to figures from Disrupt Africa, which tracks investments into the continent's growing tech ecosystem. The number of startups to raise funding rose to 159, up from 146 the year before and 125 in 2015. All of this reflects the growing profile of Africa's burgeoning startup scene. More money is coming in from places like Silicon Valley, including investments by Facebook founder Mark Zuckerberg. Good news, but the numbers mask growing pains. The space is dominated by internationally backed startups, like Nigeria-based e-commerce firm Jumia. Local markets remain fragmented, awash with small-scale and largely unprofitable startups. It is also dominated by just a few cities, with the vast majority of activity concentrated in Lagos, Nairobi, and Cape Town. Few ventures have achieved any scale, with even fewer turning a profit. Even in the well-funded e-commerce space, less than 30% of startups make any money. Fact is, Africa's tech startups face the same obstacle any other business on the continent do. Poor infrastructure, a difficult business environment, and ineffective regulation. The annual 137-country Global Entrepreneurship Index still puts Africa as the most difficult operating environment for entrepreneurs. Even Nigeria and Kenya, the driving forces behind entrepreneurship on the continent, come in at 100 and 107 respectively. With better regulation, better infrastructure, and more effective government support, the continent could be doing much, much more. Africa's automotive sector is gathering pace. In the last week, German car giant Volkswagen has announced it is investing $20 million in a new car plant in Rwanda, and it plans to double output in its plant in Kenya, which only opened in 2016. Interestingly, the company also announced plans for a ride-sharing app as part of its investment into Rwanda. The bigger picture for Volkswagen is to tap into expected demand for more first-hand cars. Regional CEO Thomas Schäfer said, "We are trying to break this thought pattern that Africa is poor. They can't afford new cars." The company's push into sub-Saharan Africa is a move away from the traditional dominance of South Africa in the space. And it bodes well for the automotive sector on the continent. The big issue is that most cars produced in Africa are done so under license of foreign brands. There are some made in Africa cars, like Ghana's Kantanka, Nigeria's Inoson, Uganda's Kira EV Smack, and Kenya's Mobius. But odds are you've never heard of any of them. At this point, there's no realistic domestic competition to global brands. But as the likes of Volkswagen expand, it could represent an opportunity for local players to leverage their presence. The market potential is huge. Africa's total automotive sector accounted for less than 1% of global production in 2015. But it is expected to grow at a rate of about 8% annually to 2025. Now, we all know Cristiano Ronaldo for his performance on the football field. But now, the Portuguese star is opening his first hotel in Africa, in Marrakesh, Morocco. The plan is to open the Pestana CR7 branded hotel next year with Portugal's leading hotels group, Pestana. The company is the latest to tap into Africa's growing hospitality sector. In October, Hilton Worldwide announced a $50 million expansion plan to add 100 hotels to its portfolio across the continent. Hyatt plans to open 6 new hotels by 2020. Why the interest? The answer is simple. The market is growing and tourist visits are up. According to the World Tourism Organization, international arrivals rose 8% in 2017 to 62 million. They've more than doubled since 1998. Importantly, contrary to what you might think, the majority of those arrivals are now coming from other African countries. 2 out of 3, according to the latest figures from the UN's 2017 Economic Development in Africa report. The sector accounts for 1 in 14 jobs across Africa and is estimated to contribute 8.5% to the continent's GDP. So expect many more hotels to go up in the coming years. If you've been following the news this week, you will have probably come across the World Economic Forum's annual meeting in Switzerland, which wraps up today. Known simply as Davos, after the ski resort in which it takes place, the gathering is famous for bringing together the world's business and political elite. Heads of state from the world's leading economies, business tycoons, philanthropists, and top CEOs all make sure to block out a week in their diaries for the occasion every January. Normally confined to the sidelines, Africa is featured heavily this year. The star attractions have been Zimbabwe's new president, Emmerson Mnangagwa, and the new leader of South Africa's ruling party, the African National Congress, Cyril Ramaphosa. Both have used the occasion to promote their economies. Zimbabwe is looking to rebrand itself after the Mugabe era, with President Emmerson Mnangagwa declaring the country is open for business. While South Africa is looking to restore confidence in its economy following years of political volatility under President Jacob Zuma. The more business-friendly Ramaphosa is widely believed to succeed Zuma in elections scheduled for next year. The World Economic Forum Regional Africa meeting will take place in May. One to watch. The African Union is set to launch the long-awaited Single African Sky initiative this weekend. The initiative is aimed at opening up the continent's fragmented airspace. The AU also hopes to ratify and operationalize its ambitious Continental Free Trade Area initiative in March and to implement it by the end of 2018. This would mean unifying its existing regional economic blocs, all 8 of them, and it could create a market of $3.4 trillion with free movement of goods across 54 countries and the free movement of Africa's estimated 1.2 billion people. Both initiatives cut to the heart of one of the continent's biggest constraints on trade and investment: limited regional integration. According to the African Development Bank, intra-African trade was just 16% in 2014. Compare that to North America's 40% and roughly 60% in Western Europe. The World Bank estimates that intra-African trade costs are around 50% higher than they are in East Asia, and are the highest of intra-regional costs in any developing region. It is perhaps Africa's biggest underutilized opportunity. Boosting internal trade is seen as a key to addressing core development challenges like infrastructure development and unemployment. Limited integration is a constant source of frustration for businesses, both African and global, so the AU's plans are welcome news. But it is way too soon to celebrate. The challenge of regional integration has been a major obstacle to development for decades. It is a massive logistical and administrative undertaking, one that any regional body, EU, AU, or otherwise, would struggle with. Also, these ideas are not new, and the record of implementation is not great. The predecessor to the Single African Sky initiative is the 1999 Yamoussoukro Declaration, which 44 countries signed up to. Almost 2 decades later, there has been virtually no impact. So far, only 23 countries have signed up to Single African Sky. The Continental Free Trade Area is already behind schedule. First announced in 2012, it was supposed to be implemented by the end of last year. Given the size of the task and the limited levels of integration across the continent so far, the revised timeline at the end of this year sounds just as unlikely. But this doesn't mean there's no progress. Trade numbers are rising, albeit slowly, and there's important investment, mostly from China, going to building new ports, railways, and other key infrastructure like power across the continent. Some of these projects are on a regional level. In addition, Rwandan President Paul Kagame is heading up a team of hand-picked experts to reform the African Union into an institution better suited to helping Africa tackle its development challenges, including regional integration. They have their work cut out for them, but the potential prize is well worth the effort. We will have to wait and see. We'll take a quick break now. Join me in part 2 of the business when I'll be talking to Werner Ayukegba, Principal Africa Analyst at IHS Markit. Welcome back to the business, where I'm delighted to be joined by Werner Ayukegba, Principal Africa Analyst at IHS Markit. Werner, thank you very much for joining me today. Risk and Africa, they seem to go hand in hand. Whenever we talk about investing in Africa, doing business in Africa, one of the first questions is, what about the risk? The political risk, the social risk, the economic risk. Is the risk perception of Africa justified?
Well, it's one of those questions where you always have to start with, it depends. Because it certainly depends on what you're out for, what you're looking for. There are a lot of cases where we have seen that the risk is not justified in terms of the premiums which insurance companies, for example, or other capital investors are seeking with respect to investing in Africa. There are other cases where you can't deny that there is conflict and there is war in certain places, where certainly that is the highest possible risk you can actually think about. But I would always urge investors to look at the specific opportunity which they're looking at and to do the work in terms of the due diligence before deciding on general risk parameters which are being thrown around on a daily basis and unfortunately put Africa on the map, on a high-risk map in that sense.
It has moved on a little bit because even if you think back to 10 years ago, the kind of thing that we saw in Kenya last year around the disputed elections would have scared people off in droves. Yeah. Yet this time, it didn't really seem to have much of an impact on investor sentiment and on the economy. You know, people just kind of got on with things. Is that a reflection that the message is starting to trickle through?
It is, and I think the Kenyan situation, as unfortunate as it looked like, on the first view, was actually a good thing because it showed process. It showed the courts taking a stand, and it showed parties actually respecting the verdict of the court and letting a process run through. So in terms of the risk perspective, the risk connotation of Kenya with that particular election, I do think Kenya actually turned out really well.
Mm-hmm, mm-hmm. Now, it depends on how you look at it, but there are things that you have to factor in if you're looking at the continent, if you're thinking of doing an investment anywhere. Looking at 2018, what would you say are some of the key issues that you need to have in mind? Some of the big macro trends across Africa. I'm thinking around things like conflict, especially in hotspots like the Sahel. We've seen a lot of activity around that. Thinking of things like migration, elections and politics. There's always volatility around these things. If you had to pick 2 or 3, what would be your key messages in terms of this is what you should look out for?
Yes. Well, the one thing which I would always have to pick, particularly if we're talking from an economic perspective, is the price of natural resources in that sense. And if you look at the price of oil, which has been trending upwards in recent months in that sense, that's a significantly good indicator for a lot of these economies which you have actually named that are resource heavy in terms of the way they generate revenue. If you look, of course, at conflict in the Sahel, that's a problem. That's a problem which is likely to continue. That's a problem which is generally also fueled by poor governance and the absence of the state.
Is this something you should be worried about if you're looking to do an investment?
It's something to certainly be worried about if you're doing an investment in the north of Niger. In that sense, if you are running a mine in the north of Niger, if you are running a mine, for example, a gold mine in Mali, those are certainly things you should be worried about in that. But then that is not all of the whole country. So if you come south of Niger, there's exploration, petroleum exploration going on, largely untouched, at least at the moment, with respect to where it is based. So you always have to be wary about specifically where you have militancy problems rather than painting a whole country or a whole region in that sense.
The point is nuance. And on that, let's look at some specific countries.
Yes.
They are the usual suspects that you've got to look at. Egypt, Nigeria, South Africa, Kenya. These are the big economies.
Yeah.
All of these economies in their own way are in interesting times, shall we say, at the moment. Let's just run through them. Egypt, big election coming up in March.
Big election coming up in March. We don't think that there are going to be any surprises there. In that sense, General Fattah al-Sisi has actually strengthened his power in recent times. We don't see any major...
And he has no opponents. Everyone has dropped out.
No, we don't see that. But then one key thing here is to see that Egypt seems to have actually been improving economically in that sense in what they're doing. We were expecting potentially protests in that sense, which we aren't seeing. We have seen the FX situation in terms of the reserves, which they have strengthened. The programs which they're running with the IMF and other international donors look to be positive after a second review in that sense. And so positively, and the last thing for Egypt also, major gas reserves are actually coming online in 2018. And so there's a lot of...
The Zohr gas field.
Exactly.
One of the biggest ever discovered.
Yes, and so there's a lot of positive news in that sense, which is coming at least from a business perspective out of Egypt for 2018.
So al-Sisi, he does enjoy legitimacy, which is perhaps not that obvious from the outside, but internally.
I mean, it always depends from which angle when you're looking at legitimacy in that sense. But from where we stand, there's only one president in Egypt at the moment, and he seems to be accepted by the population, at least at the moment.
We have to run through these a little bit. Yes. I mean, there's so much to talk about, but very quickly on South Africa, the big story is what happens to Jacob Zuma now that Cyril Ramaphosa is in charge of the ANC. Is he going to be removed? Is Cyril Ramaphosa going to be the next president?
Well, there is an agreement, or is generally agreed in South Africa that, or at least within the ANC, that Zuma is going to step down prior to elections in 2019. Now, the question is, when is that going to be? I suspect Ramaphosa wants it earlier for him to be able to have time to put his mark before an elections for the ANC and to increase ANC's chances in the elections without a tainted Zuma in that sense, with all the corruption probes that you have. Now, how do you get Zuma out? How does Zuma move out of that office without, of course, having to face numerous legal challenges post-elections?
The key question is also, is Ramaphosa going to be able to use this time to restore confidence in the economy? Do you see that happening?
We do think having Ramaphosa in as head of the ANC has already done a lot to boost confidence in that sense. If you look at the South African stock market, it has gained tremendously and the currency has strengthened vis-a-vis the dollar in the past month. In that sense, that is already a significant sign of confidence. When we look at what Ramaphosa has said in respect to what he's looking to do from an economic perspective, you have, I think investors are greeting that positively. It is now to see how he's able to implement all of that during the 2018 period.
It's going to be another eventful year, no matter what happens. Let's talk about the really big one, Nigeria. Elections next year, the campaigning is already in full swing. Coming out of a difficult period for its economy, oil prices are rebounding. Yeah. That's good. Yeah. What can we expect economically from Nigeria in 2018?
Now, it's always a difficult one to make predictions about Nigeria whenever we are in front of elections in that sense. As you have already said, the electioneering has already started, and it makes it difficult for Nigerian policymakers to be able to push through to be able to push through policy or decide on policy without thinking about the electoral consequences of that. And so what we're likely to see, unfortunately, in Nigeria is a lot of short-termism as we move towards both major parties coalescing around a particular candidate. In the case of the APC, the governing party, we do think President Muhammadu Buhari is likely to stand again, particularly as we saw Atiku Abubakar, who is a strong potential candidate also within the APC, decamped to the PDP. That is a key sign that the president is likely to stand.
uncertain, difficult to predict. We've touched on Kenya. We don't have much time left. We've touched on Kenya. Briefly, outlook positive or negative for Kenya 2018?
Kenya, that's a difficult one. That's certainly going to depend on the price. Kenya is a net importer of oil products, and so of course inflationary pressures likely to rise. If at all, Kenya has to import oil much more expensively in that sense, which feeds into a lot of other products within the country. There is still a lot to be able to done from an infrastructural perspective. Debt to GDP is rising fast. So there are some negative blinkers showing up for Kenya in that sense, unfortunately.
Now, very quick fire question, this one. We are almost out of time. Your top line, we've talked about the usual suspects. What are some other key markets to look at and why? No more than a few seconds on each.
Well, two I'm going to pick up the first one is going to be Angola. We just had a change in president in Angola. There's a push going through the system in that sense. We're seeing major players being taken out of their positions, and the president is looking to diversify the economy away from oil. We're seeing a lot of movement also within the oil sector and the banking sector in that sense to change the way things are. And so positive signs there if the country is able to keep some of those reforms in that sense. A second one, which is generally not on many people's list, is Mozambique.
Very, very, very quickly.
It's Mozambique, and of course, that is where the gas is. Huge gas deposits in that sense. And so, of course, we do think 2018, we're going to see a lot of activity around exploring that.
Some of the biggest untapped gas reserves in the world.
Yes.
So it'll be very interesting to see what happens there. Werner, thank you very much, as always. Lots to talk about, lots more to talk about, but we've run out of time. Thank you very much for the insight.
Thank you for having me.
From all of us here at The Business, thank you for watching. Please join us again next time.